September has witnessed huge foreign fund outflows from the Indian stock markets. Foreign portfolio investors turned net sellers for the first time 7 months in September. Data shows that FPIs have pulled out a net $1.5 billion with 2 days of trade remaining this month. The reason? Rising bond yields and a stronger US dollar. FPIs have been net buyers from March to August, buying shares worth $21.3 billion in this period. Veteran emerging market fund manager Mark Mobius, who manages around $300 million worth of assets across the globe, remains bullish on the India story despite the latest sell-off by FPIs this month. In an exclusive chat with Business Today's Rahul Oberoi, the ace investor spoke about why he believes in India's growth. He also spoke about the possible impact of diplomatic tensions between India and Canada.
And what is keeping you bullish on India? Which are the factors?
So many things there. Of course, the fact that it's a democracy, and you have a very strong capital commitment, capital growth, number one. Number two, high growth of the economy, one of the highest in the world. Number three, young population. Number four, English-speaking population that is very evident around the world. You know, India has so many people around the world that are leaders in different fields. And of course, that know-how is going to be coming back to India and help the growth of India. And of course, India is coming from a low base. So the percentage changes in terms of growth are going to be very good.
If we talk about Chinese market have hardly delivered any return to investors in 2023. So which are the factors weighed on sentiments this year? And do you think any further underperformance in the country can benefit in Indian markets?
Well, as you know, a lot of companies around the world, particularly American companies, are wanting to diversify their base, their manufacturing base, away from dependence on China, which has been very, very great, as you know. But that does not mean that they are going to exit China completely. China will still be a very important market, not only for manufacturing, but also for exports from other countries around the world. China is a big consumer market. So the big change that's taking place in China, of course, is that they're moving away from emphasis on property investment and now more emphasis on technology. Because as you know, Xi Jinping has very clearly stated that he wants China to be able to overtake the US in terms of semiconductors and technology generally. So there's going to be an incredible amount of investment in those areas.
If we talk about recent tensions between India and Canada, so can we see some outflows from Canadian funds from India?
Yes, you will see some, but this is very insignificant. You know, when you look at the total picture of trade, investment, etc., Canada is a very, very small part of the total picture. So I don't think this is going to be significant. There's a lot of noise, I know, about Trudeau and what he said, et cetera, but I don't think it's going to have a big impact.